All right, everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. Here we are with ticker symbol CTRM, Castor Maritime Inc. And before we jump into this chart, all I ask is for you guys to smash that like button to let me know you watch this video. Helps out the YouTube channel, and to stay tuned towards the end of this video. Why? Because I have a lot of information to share with you guys, and it's going to prepare you for what's going on. We're going to talk about the 10-year treasury. We're going to talk about the S&P 500. We're going to talk about the market overall very briefly and prepare ourselves as hawks ready to strike when the opportunity calls. So I definitely want you guys to stay tuned on in. It's going to be information that can definitely enlighten beginning investors, learning investors, and experienced investors. So I look forward to sharing with you guys my opinions, my thoughts, and I look forward to seeing your guys' thoughts down below. And there is a multiple question. Well, it's not a multiple choice question, but it is a question where you have two choices to choose from. And I look forward to seeing your guys' comments down below. So CTRM pulled down through the support, pulled down through the 50-day moving average, which was in tug-of-war zone, and got rejected from that resistance and didn't touch it again at all. This definitely needs to get back up to $1. We've talked about this before. Now, CTRM pulling back is two ways to look at it, and a lot of investors are saying that this can go up to $5, right? Because of the way the expansion of the fleets have happened and how they continue to grow. And by the way, I want to say thank you to all the investors that yesterday took the time to go ahead and talk about, how many they have in their fleet and answering that for me, because I saw one amount on their website, then I saw another amount in articles, and then others are saying a different amount. So thank you guys so much for correcting me on that and sharing that information, not just with myself, but all the other viewers as well. And today I look forward to seeing your guys' thoughts and comments on the second half of this video, and also about how you feel about CTRM. Do you think this really needs to touch $1 to have some strength, or do you think you see strength right where it's at and these are opportunities every single pullback? I look forward to seeing your guys' thoughts on that. So here we are with our support. It broke through it. The lowest point reached recently was down here at 90 cents. That's definitely a support level you want to be remembered and you want to keep in mind. Now, I did talk about yesterday the 94-cent range. If it got broken through, it would go lower. We certainly saw a lower point, but now it's leveled off and spiked up. Now, yesterday's support, you could see how it's turned into a resistance as soon as this popped up. So that's why support levels and resistance levels are so important, because yesterday's support is today's resistance. Very interesting stuff. So the resistance actually moved up a little bit. So I'm going to go ahead and pull this up and move it right to its new location. But let's go ahead and see here our support. So the 50-day moving average and support is what we're going to talk about first. The 50-day moving average is 96 cents. We're sitting at 96.18. So to the hundreds and thousands place, there's a small discrepancy there. It's a very close one. We'll have to see if the bulls can pull through, or are the bears going to maintain it below it. So very close to tug-of-war zone. So our support here is 93 cents. If that gets broken through, the next point is 90 cents. And you want to see if the bulls can bring this back up, or are the bears tearing this one down fairly fast. Super important to watch and be mindful of, okay? I do want every single investor and viewer to be aware of that, because if 93 cents gets broken through, we are getting deeper into bearish territory. Now, our resistance is 97 cents. And to be exact, 97.09. I would personally just round that down to 97 cents. That is the peak here that we saw, and that is yesterday's support level to begin with anyways. So 97 cents definitely needs to be broken through and turn into a support so that the bulls can show domination and leverage over this chart. But back to talking about $1, this is the true resistance level right now in the short term for the next several days that the bulls need a breakthrough. That's where they got rejected twice. That's where they need a breakthrough, but before getting there, they need a breakthrough 97 cents, turn it into a support, pull upwards to reach newer highs and new resistance levels. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share it with your friends and community. And don't forget to hit the like button to let me know you watch this video. Stay tuned till the end. I know you guys might not want to listen to it or have to go ahead and talk about it, but we need to be aware of the 10-year treasuries and how the overall market is doing and why it's doing what it's doing. So stay tuned for it. Welcome back, everyone, to another video here with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. And I know we don't want to talk about this. Like, why are we looking at the S&P 500 index? I want to talk about stocks that are going to go up. Tell us what stocks to look for. Invest for Tomorrow. I get it. I don't like doing these videos, but I enjoy doing them because I'm sharing with you guys my insight, my opinion. And every time I talk about it, it's just to give you guys some preparedness and turn us into hawks, right? We want to be hawks flying above, just waiting, with that eagle eye vision to strike for the opportunities, because that's what we're looking for. We want to be, just hovering, chilling, as I call it, and just kind of taking it easy, man, and taking it step by step, and let this storm be a storm, but you just ride the wind, and then once it's ready, you strike it, and you take it. You take what's yours. So one thing that I want us to be aware of is in this video, I know I want to talk about a stock, but if you guys didn't know, I have a second channel. It's a very small channel. Just got it started a few days ago, about a week ago, and here we are with one of the most recent videos, and I'm talking about individual stocks. A lot of people are loving it, and I'm talking about stocks that I've talked about here before, or just reiterating on some of them. And they're going to be short videos, just about the stock, nothing else, no chart analysis, just diving in deep into why the stock has potential. So definitely check out those videos. Check out the channel if you haven't already. I would really appreciate your guys' support. Let's try to get to, 100 subscribers before 1,000. But the goal is to get to 1,000 plus in the very short term, especially that we have here on my main channel, well over 24,000, 25,000 different individuals already, which is so awesome. I'm so glad. I'm thankful for all of your guys' support. But let's jump into this. So the S&P 500, why is it pulling back? In simple terms, it is the 10-year treasury. Look at that spike in just a few days. I mean, in just 2 weeks, we've spiked up tremendously. And if we put the 1 day is going to show us a pretty big consolidation within the 1.71 range. And then if we put the 5 day, you could see here the big spike from 1.63 all the way up to 1.75. So that was the big shock here in the market today. Could we see more pullback tomorrow? Certainly, it's not guaranteed. No one knows the bottom. No one knows how far it could go, but it's possible. Now, I want you guys to be aware that in my previous videos, if you guys have heard it, I would love for you guys to comment down below if you've heard me say this before, but I always say this, that we could see this reaching 1.7 to 2.0. I've talked about it, 1.7, 1.8, 1.9, 2.0. At some point, we're going to find a consolidation, right? Finally, like this for weeks or maybe a month. And the stock market's going to get detached from this. But the more we spike up like this, crazy spikes, the more volatility it's going to give us in the market. But the more the opportunities are getting bigger and better. Why? Because we're hawks. We want to catch these bottoms. We want to catch these dips. Now, we don't know the bottom, so you might want to, kind of wait out the first dip. Like, these first 2 dips, I was a little hesitant, but every dip after that, I was striking. I want you guys to be aware of that. And this is not financial advice, and I'm not here to tell you guys how to buy, sell, or hold any position, but, this is our first dip. Let's kind of get a feel for it. Now, if we dip even harder tomorrow, as an investor, you want to rationalize how things are going and what that means for you. Now, I don't know how far down we can go, but I do know that we could possibly re-meet somewhere in the middle of this run, probably re-meet down to these lows, or possibly even break through it. But that's why you want to find stocks that you're willing to hold for more than 6 months, more than a year, so that when these dips are happening, opportunities are presenting themselves, you strike every single time. And after you're done striking, at some point, every single pullback is the beginning of another bull run. And if you pay attention to the micro perspective of a pullback, in these little movements, every pullback had a run. Every pullback had a run. Just look at it. Look at the chart. Now, after a bigger perspective, every pullback has a bigger run. Every pullback has a bigger run. Every pullback has a bigger run. I mean, it's just like the rule of life. I don't know. I guess stocks know what gravity is because they pull back to it, and all of a sudden they know how to, go to Earth's gravity, which pulls things down like an apple falling from a tree, and then all of a sudden they go to the moon, and all of a sudden they go off of the moon's gravity, which you jump and you kind of just start hovering your way up until, gravity pulls you right back down. I don't know. It's like it's a double-edged sword. It likes being at Earth, and it likes going to the moon where there's less gravity and stuff like that. So it's just a rule of thumb that every pullback is going to have a run, and every run is set to have a pullback. That's just the way the market works. But throughout all that volatility and the small movements, when you zoom out, stocks tend to go upwards if you find the right ones and if you're in the right sectors of the market. Because the overall market gives you an idea, but individual stocks don't always go the way the market's going. Sometimes they do better, sometimes they do worse. That's why you want to find stocks that you have high conviction in and you know why you're in them. So that's the point as a hawk to strike. So if there's stocks that you believed in back here, back here, back here, you best believe that on pullbacks you need to believe in it more than ever. Okay? It depends though if fundamentals have changed. So that's another thing too. If the pullback is pretty big, you want to focus in on stocks that their fundamentals haven't changed. Good balance sheet. Their revenue is growing. Net profit is growing. The demand is there. Stuff like that. Because when you're around penny stocks, sometimes their fundamentals were never good to begin with. They were just running because of speculation, hype, and news. So some stocks run on speculation, hype, and news, and those are great stocks when the overall market over months is going upwards. But when it's this volatile within just 3 months, you want to find stronger fundamentals, not stocks that just move when an article comes out. Articles help, speculation helps, but fundamentals are the foundation to where the stock can go and how far down it can go and how far up its potential is to go. So keep that in mind. So I want you guys as investors to focus in on these opportunities. Now, I don't know if I already showed this, but I want to go ahead and repeat this if I did already. But yesterday in the 5-minute chart, you can see here the power of Jerome Powell speaking. And I pointed out 2 points, the bottom here and the top here. And this was a run and this was a pullback, and it continued to pull downwards today. I want to ask every single investor, at what point do you think Jerome Powell started to speak? At point A or point B? I'm going to cover this tomorrow. I hope you guys have a comment down below for us. There is no right or wrong answer. I just want to have a discussion as a community, and I look forward to seeing people's perspective, and I will share my opinion on why one point is more significant than the other. So I look forward to seeing everybody's thoughts on that. I want you guys to be hawks, ready to strike. Don't be fearful. Be ready. Be prepared. We are not bears. We are bulls, but we want to be prepared. We want to be ready. As always, guys, thank you guys so much for watching, and let's make some money.